Tesla is at a critical level right now, and the next few weeks could determine where this stock heads for the rest of the summer. Starting with the weekly chart, Tesla is currently trading around $391 and is sitting right on top of its 50-week moving average. This level has acted as support multiple times in the past, making it one of the most important areas on the chart. The 9-week moving average is currently around $403, which means Tesla has lost short-term momentum and is now attempting to hold longer-term support. Looking at the market pulse indicator, momentum has rolled over from elevated levels and continues to trend lower. The blue momentum line remains above zero, but it is clearly moving in the wrong direction. Relative strength has also weakened and is no longer showing the bullish conditions we saw just a few weeks ago. The MACD is also flashing warning signs. The MACD line has crossed below the signal line and histogram bars have turned negative. This suggests momentum is shifting away from buyers and towards sellers. While the long-term trend remains intact, the stock is losing strength in the short term. Moving to the daily chart, the picture becomes even more interesting. Tesla recently rejected from the $440 area and has now fallen back toward major support near $390. This level is important because it lines up with the weekly 50-week moving average and several previous support zones. Price is currently trading below the 9-day moving average, which sits around $408. Until Tesla can reclaim that level, the short-term trend remains under pressure. The market pulse indicator on the daily time frame continues to move lower and remains below the zero line. Relative strength has weakened significantly and buyers have not yet stepped back in with conviction. The MACD also remains bearish with negative histogram bars and the MACD line trading below the signal line. Momentum is still favoring the downside. The key level I'm watching is $390. If Tesla can hold this area and begin reclaiming the 9-day moving average, we could see another attempt higher toward $440 and potentially the recent highs near $490. However, if $390 fails, the next major support zone sits closer to the $360 area, which could become a magnet for price. For now, this is a wait and see chart. The longer-term trend remains constructive, but short-term momentum is clearly weakening. The next move will likely be determined by whether buyers can defend the support level. Follow the signal, not the noise. Data over emotion.